It's a rough open. 5 days in a row, we could be down on the S&P. We haven't seen that since, what, October, November 2016. Look at the sectors. Not a lot of bright spots here. Utilities and banks, and that's about it. The key thing is the big losers have continued. Big industrial names weak again. Big tech names also weak again here. We're going to earnings season, and the guys we're talking about, this is an unusually complicated earnings season. They're really trying to figure out what the guidance is going to be looking like. But look what we've got here to deal with. We've got higher rates. We have higher raw material costs. We have talk about higher wages. We have weaker foreign currencies. We have tariffs. We have potentially weaker China demand. All this impacting margins. Jim was mentioning that. The one thing that could really help margins is revenue growth. Now, it's one thing when your costs are going up 2%. But look at these revenue growths we're seeing for the year and into 2019. If your costs are up 2%, but your revenues are growing 7% or 8%, well, that's going to be a huge help to your margins overall. And that may be the one thing that ultimately saves us, this revenue growth. But there's still a lot of concern out there. I mean, we all know it. And it's in the markets already, some of this weakness that we've seen. Look what the global markets have been looking like. They haven't been doing that well this year. Shanghai's 23% off of its highs. South Korea, Italy, Germany is not far from a 52-week low right now. A low, not a high, a low. And our markets, well, we've been talking about all the sectors that are doing crummy. Home construction stocks at new lows. They're down about 25, 26%. They're 28%. Social media, we've been talking about the weakness there. The material names weakness, 13%. And even the Russell, which was a market leader in the first 6 months, it's now 7%. Off of its recent 52-week high. So the market's already reacting to some of these issues out there. It's not like nobody's noticed this at all. Did you notice Procter & Gamble? I thought it was quite amazing. They got an exemption for steel on the tariffs for their razor blades. Is this going to be the new normal, getting these kinds of exemptions? We haven't seen many of these. I thought that was a real eye-opener, not helping Procter & Gamble that much. We don't know how material it is, but just the fact that they got an exemption on the tariffs, I think, is noteworthy. Finally, I'm waiting for comments from Fastenal. Now, here's a big company that would say something about tariffs. They did not in the actual report. They did beat it, but you see it's down 2%. The conference call will be at 10 a.m. Eastern time. Hopefully, they'll have something to say about the impact of tariffs, and maybe we'll get some more information on what's going on. Finally, there's an IPO. I haven't talked about IPOs recently. Interesting one, pricing tonight for trade tomorrow here at the New York Stock Exchange. That's Livent. This is a big producer of lithium, obviously, for batteries that go into electric vehicles. So a lot of interest in this. They're trying to raise, do the math here, about $380 million, $2.5 billion market cap potentially. We'll keep an eye on that. There's not a lot of lithium producers out there. There's Albemarle, ALB. So this is really a play on supply and demand on lithium. There's a few suppliers out there. They're all trying to increase their supply, and we'll see. It's a bet on whether the supply-demand equation is going to be in balance. Obviously, demand is going up for that. We're sitting right near the lows for the day, Carl, down 104 points in the Dow. Back to you.